Assignment 1 is obviously due on the 13th, which is next week. So you obviously need to submit this online from the MyUnisa portal before the actual due date. All right, so you said you've got answers for question 1 and 2, so go for it. Give me 1's answer and 2's answer. It's theory relating to the information around partnerships.
Yes, so question 1's answer is number 2, A and E.
Okay, you went with A and E, and question 2?
Yeah. Question 2, I went with number 1, A, C, and E.
With A, C, and E. Okay, so in the 1, you had to choose the correct answers, and in the other, you had to choose the incorrect. Do you agree?
That's correct.
All right, so in question number 1, you went with A and E.
Yes.
Okay, so if we look at A, the concept of going concern assumes that an entity will never be liquidated. Is that statement true?
Yeah. Well, I think it is, because on page 9, the only thing is that never, which bugged me a little bit.
Yes. Okay. When you see something like this, it generally isn't the answer, because remember, never means that companies that are a going concern will never go bankrupt, and that's not true.
Okay.
Okay. So going concern relates to a company continuing to operate for the foreseeable future. See, the key word is foreseeable. So as far as we can see in the future, we're going to believe that this company will continue to operate. Okay, so A is actually false.
Oh, shit, okay.
Okay, because it should never be liquidated. Right, remember, companies that operate as a going concern at some point in time may be liquidated. And they may be liquidated not because they're profitable or unprofitable, but it's because the partners want to resign or they want to retire. Think about a partnership. Okay. If the partners want to retire, that partnership will end, even though the company is a profitable business.
Okay.
Okay, remember, liquidate just means to sell all the assets and to pay out all the partners.
Yeah. Okay.
Okay, right. So the answer for this one, if you look at listed entities need to comply with the Companies Act, IFRS, and regulations by the JSE. If it's a listed entity, listed entities are public companies.
Yes.
Do they need to comply with the Companies Act?
Yes,
they
suppose
do.
So.
And if they're listed on the JSE, must they meet those requirements?
Definitely.
Yes. Okay, so C here would be correct. And if I look at D, D was a very, very specific question asking about IFRS related to SMEs, so small and medium-sized enterprises. You have to look at the textbook to actually get the correct answer. So I've got the answers for you. There's it. Okay. If you look at D, D is true based on the textbook, page 19. There's a table there in the textbook referring to the different scenarios where IFRS will be applicable. And if I read it to you quickly here, okay, in table 1.1, it says, category of a company. Point number B says, whose public interest score for the particular financial year is less than 100 and whose statements are independently compiled. The financial reporting standards applicable is IFRS for SMEs, which is definitely correct based on that. Okay, so I've tried to give you a bit more information. So I'm not telling you, well, this is what I think the answer is. I'm telling you this is what I think the answer is based on what I've found, okay, in terms of the textbook as supporting information. Okay, I agree with you with page 9. So I see you've also got that reference, which is brilliant, okay?
Yeah.
You spoke about the going concern. You'll see here, in the definition for going concern, they say on the basis that it'll continue in operation for the foreseeable future. Okay, so not forever.
Yeah, it says, has neither the intention nor the need to liquidate.
Correct, yes. All right, so it is quite specific. They do test specific theory in the assignments because obviously they want to see if the students are going through the material. So I'm really happy that you've gone through the material. You even found the correct reference for going concern, which is brilliant. Okay, most students don't even read through the textbook, but at least you've done that, which is great. Okay, so well done for getting that reference. Just be careful though with the wording. Right, so they said never liquidated. That's why I would say false for that one. So I would go false, false, true, true, and I would choose option 4.
Okay, perfect.
Okay, the reason why I didn't choose E is because they don't specify which users, internal or external. So the statement isn't true as it sits because it could be a different form of user. Users have different requirements.
Okay.
Okay, but based on the textbook, based on C and D, they're definitely correct. Okay.
Okay.
All right, and then 2, I went with option 3 here. Okay, so just to discuss that, remember we were looking at the ones that were false, not the ones that were true. So when looking at the question, all right, number A, expenses may be disclosed by nature or function. That's true. They can be disclosed by nature or function because you can classify them according to bigger groups. Okay, so I could group everything like finance costs, or I can group everything as admin expenses, or I could look at function. Okay, so function or nature, both is acceptable. Right, management has a choice to present expenses above income. Are you allowed to do that?
Management has a choice to present expenses above income.
No. Okay, remember, in the statement of comprehensive income, remember the rules are very specific and the format is very strict because you're presenting information to your users. And if I'm following the IFRS, I need to follow the rules correctly. So the rules state that a statement of profit and loss has a specific layout or format, and that's the disclosure. So you can't show expenses before income because that'll be misleading. But obviously income comes before expenses because that's how I calculate profit. Profit is the difference between the two.
Okay, perfect. That makes
so
sense.
B is definitely false. Okay, so now we're choosing between obviously 2 and 3. Okay, if I look at C, the statement of changes in equity reflects an entity's cumulative performance. That's true. Because what does the statement do? It shows you opening balance, profit for the year, and closing balance. And it keeps updating year by year by year by year. Okay, assets acquired for capital appreciation. Purposes are current assets. It's not current assets. If I'm buying assets for capital appreciation, I'm looking long-term, not short-term.
Exactly.
And if it's long-term, it's non-current. So that's false. So B and D are false. And then obviously E is false as well because you don't use accruals for the cash flow. You use the cash basis for cash flow. Obviously, it's cash. So everything is cash. Receipts and payments. That's it. No income earned and expenses incurred.
Oh, that's actually on page 24 in the textbook. I got that as well.
Awesome, great. Yeah, so if you've got the reference, great, perfect. Okay, good. All right, so those are the first 2 questions, and then we've got the first of the calculations.
Yes.
All right, so 3 to 5 is looking at a specific partnership. All the questions in this assignment was based on partnerships. So you had to think either disclosure, change in ownership, or liquidation. So what do I have here? Which of the three? Disclosure, change in ownership, or liquidation?
I think it's just a disclosure.
Correct. It's a normal disclosure question. But what were they asking you for? We need to look at the required. Okay, so 3 was asking for capital accounts.
Yep.
So what is a capital account?
That is an account that that you get on the statement of changes in equity.
Yes, okay, so you could either draw up the SOCI, the statement of changes in equity, and show the capital, or if you wanted to, it's disclosure, you could draw a T account, a general ledger.
Oh, so you can do it both ways.
It doesn't matter which way you do it here, because it was multiple choice. They were looking at the balance.
Yeah.
Okay, so if they were very specific, and they ask you for a specific statement, then we need to draw it up. But they weren't specific here, so you could have gone SOCI, as you said earlier, or you could have gone T account. It didn't matter which one you did.
Okay, well, I tried both. And with SOCI, I actually got to a number, but my number isn't matching one of those in the options.
Okay, so we'll check just now because we need to look at the adjustments. Okay, good. All right, number 4, drawings. Again, it's a T account or statement of changes in equity.
Yeah.
And then number 5, what would you use for number 5 to get the correct answer?
Which one of the following alternatives represent the correct amount to be shared by partners as a profit or loss? That will be on the statement of comprehensive income.
No. The statement of comprehensive income just gives us profit. It doesn't give us what they get.
Profit or loss. Yeah, but you get your profit or loss at the bottom, and then don't you use that as per the profit sharing ratio?
Yes, but then where do we do those calculations?
Also on SOCI then, I suppose.
No. Well, yes, you could, but it's appropriation. That's the focus. Okay, so see, I'm trying to focus on exam technique in terms of you read the question, you need to think about what am I going to do to get the right answer? This is what I'm going to do to get the right answer. Draw up the appropriation account, either a T account or the SOCI column for it. Okay, either or, it'll work out the same way. Okay, so now you know what to do. So what I did is I did 3 T accounts. Okay, one for capital, one for drawings, and one for the appropriation. Right, so let's go back to the question. Right, so you said that you identified what they are. So tell me what they are.
The elements?
Yes.
Okay, so the first 4 are all capital.
Good. Only the first 4?
Yeah, then we've got drawings and drawings.
Yes, okay, so drawings and drawings are drawings, okay? Yeah. Those first 4 are capital, but they all go where?
SOCI.
In the SOCI, good. Okay, great, nice. Keep going.
And drawing plus the SOCI as well.
Keep going. Bank.
Okay, bank. Well, all the rest are assets, except accumulated depreciation for both, which are negative assets.
Good. Okay, so those are all assets, and those are negative assets.
Yeah.
And what are these? Okay, well, what is inventory?
Inventory is an asset, and it shows us it's periodic.
Yes, and then the last one?
That's profit for the year, which we just record on the statement of comprehensive income.
Okay, yes, you can record it there, but if you're looking at disclosure, you would then show that as part of your appropriation. Okay, because that's what I'm going to be sharing after having done some adjustments. All right, great, good. So I'm happy that you've understood the different accounts. That's important. Okay, knowing what you've been given is key. Right, so if I'm looking at the first question, the question said, calculate the capital for Cinderella.
Yes.
Okay, so let's look at what do I need to calculate capital for Cinderella? Well, I need an opening balance, right?
Yeah.
Okay, so you would have recorded 320 as an opening balance. On which side of the account?
On the credit side.
Correct, good. Okay, question. Is there anything in the trial balance that is going to affect the capital for C?
No.
No, nothing. So you don't have to look at anything else. All you need to do now is look at the dish information and find the point that affects the capital. Right, so does number 1 affect capital?
Well, it might, I suppose.
It won't, because capital is looking at what the owner is entitled to. Okay. Profit and loss, in terms of sharing, affects which account?
Current account.
Yes. See, that's important. That's good. See, now you know what account will be affected by that. Okay, next one. Will this affect capital?
No.
No, this will affect which account?
Drawings.
No, it won't. It's interest on drawings. Drawings will affect drawings. Interest on drawings will affect what account?
Interest on drawings.
Well, interest on drawings could be shown separately, but it's referenced in appropriation, because who pays for the drawings? The interest on drawings.
The partners themselves.
The partnership.
Oh, the partnership.
Okay, the partnership pays it to the partners. All right, interest on capital. Will interest on capital affect capital?
Yes, definitely.
No. Interest on capital will affect the appropriation, and it will affect their current account.
Shit, okay.
Okay. Will partners' salaries affect capital?
No.
No. Again, this will affect appropriation and current account. Okay, next. Number 1. Is number 1 going to affect capital?
Sorry, let me just make a note here. Yes, I suppose that will, because it's cash and equipment and stuff.
Exactly. All right, so how much did C contribute? And did C contribute during the year?
Yes, you did.
Yes, so it would be applicable to the actual account. Okay, so what are you going to do to C's account?
So she contributed office equipment to the value of 25. Okay? And then she also gave cash to the value of 60,000. So that will increase capital. You will credit capital.
Exactly, good. All right, so that's what you're going to do. You're going to credit capital. Okay, just to quickly go through the last three and then we'll check the answers. Number 2, is this going to affect capital?
No.
No, this relates to when?
Well, that salaries at the end of the year.
Not
Or
the
next
end
year.
of the year.
Next year.
Next year, yeah, all right. Remember, this is looking at after year end, not during the year.
Yeah.
So again, don't look at things that don't require any disclosure for the current year. Next year we'll deal with this because that was something that was agreed on.
Okay.
Okay, is this going to affect capital?
During the year, the partners withdrew inventory. Yes, I think it will.
No, it won't. This affects drawings.
Okay.
Okay, if owners take its drawings,
Okay.
will depreciation affect capital?
No.
No, depreciation will affect appropriation because it's an expense that needs to be taken into consideration before paying out the profit. So there's the profit we saw earlier. We need to consider it.
Okay, perfect.
Okay, so see, that's understanding. We've gone through adjustments and we've just spoken about which accounts, okay, are going to be affected. Right, so we said point number 1 is going to affect this calculation for capital. Okay, so the capital account for C. Right, so you told me that you're going to credit capital. So all I need to do is credit the capital with those amounts.
Okay.
And I get option 4 as an answer.
Okay, so you have 320, and you've got 25 and 60.
Yes,
And that adds up to 405.
correct.
Okay, well, that's easy enough.
Yes, okay, so the key is understanding what to do with the information. That's the key.
Okie dokie.
Okay,
Yeah.
next.
Okay,
What
next,
account
so
are we looking at?
here we're looking at the drawings account of snow.
Correct. Okay, so let's go back. What did we say will
here I got
affect the
an
drawings
answer.
account? Point number 3.
Yeah. Oh, there I got an answer of 66.
All right, you got 66. Okay, but now you're adding the interest, which you're not supposed to. Okay, interest on drawings goes where?
To appropriation.
Yes. Okay, just a note here, asterisk.
Shit, man.
Interest on drawings is covered by the partnership. So the appropriation accounts will record it.
Okay, so that's at 45.
It's 45 and the inventory that was taken by S.
Okay, point number 3.
Yes. Okay, we went through those points. We saw point number 3, which was a withdrawal. A withdrawal by the owner affects the drawings.
Yeah. Okay.
Right, good. And then the last point was looking at appropriation. Okay, so in appropriation, I need to go back to the T account, the trial balance. Which accounts go into appropriation? Let's recap, let's revise. Appropriation records what accounts?
Suppose current accounts.
No, current accounts are equity accounts.
Okay.
What is appropriation trying to do? Distribute or allocate the profit or loss.
Okay.
So how do I calculate a profit or loss?
Well, sales less cost of sales.
Yes, which gives me gross profit, but I can also have other income and other expenses.
Okay.
Okay, so appropriation will record income and expenses. Okay, you look at both when doing the appropriation.
Okay.
Right, so do I have income and expenses here? No, I don't. The only account that represents income and expenses is this one. Profit for the year. Okay, if there's a
Okay.
profit for the year, which side is bigger, the debit or the credit?
The debit.
The credit would be bigger because it's a profit. Think about income. Income has what balance? A credit. Expenses have what balance? A debit.
Yeah. Okay, of course.
Okay, so if your income is bigger than your expenses, you'll be left with a credit.
Okay, perfect.
Okay, so profit for the year of 125 is going to go on which side of the T account?
On the credit side.
Correct. Okay, and what did we say the partnership is also going to have to pay? All the
Expenses.
partnership entitlements in terms of the interest on drawings, the interest on capital, and
Okay.
any other adjustments that may have taken place, like depreciation.
Okay.
All right, so
So we
there's
need-
the appropriation account. Okay, there's the profit before adjustments. It was given in the question.
Okay.
All right, we need to discuss some of the workings.
Yeah.
Right, so interest on capital. What did they say I need to calculate interest on capital on? The opening or the closing balance?
Opening balances.
Good, so what is the opening balance for S, for snow?
400,000.
Good, and what is the interest rate?
4%.
4%. Okay, so 4% of 400,000 is 16,000.
16,000. Okay.
Okay, and then you do the same thing for C.
Yeah.
C's opening balance?
Was 320.
Good. 320 times 4% gives me the 12,880. Okay, question. Why do I put this on the debit side of appropriation? Let's revise.
So its interest on capital will be charged at the rate of. So that's money that the partnership will have to pay. So it's an expense.
Correct. Well, it seemed like inverted commas an expense. You're right. Okay,
Yeah.
so interest on capital would be debited to the appropriation, and you will credit the current accounts. Okay, because remember, the current account shows what they're entitled to.
Okay.
Okay, so there's just the working just to show that interest on capital. I'm just going to try add a bit more workings just to help with the understanding. Okay, so debit appropriation, credit the current account with interest on capital. Make sense?
Yep.
Okay,
Does.
interest on drawings. What did they say we need to calculate? Open your closing balance.
Closing balance.
Good. Okay, so notice how I've highlighted this. Interest on S is calculated on the balance of S.
Okay.
Okay, so 60,000 times 10%, which is the interest on drawings, gives me 6,000.
Okay.
Okay, I had to do a separate working for the other drawings, which is on this side. Okay, there's drawings for C.
Okay.
Opening balance plus the inventory that was taken
Okay.
gives me the 80,000. 10% of 80 gives me the 8,000. That's where those amounts come from.
Okay, perfect.
Depreciation, what is that going to do to appropriation? Decrease or increase the amount that can be shared?
Decrease.
It will decrease. Good. Okay, remember, if you don't remember that, just think about what is it? It's an expense. So what balance does an expense have?
Debit balance.
A debit balance. So even in appropriation, you're still going to record it on the debit side. Okay, we need to look at the working. So depreciation on vehicles. What did they say in the question?
Vehicles was straight line method over a period of 6 years.
Good. So straight line is calculated on what?
On the cost price.
Correct. Good. Okay, that's revision. Okay, great. So what was the cost price of vehicles?
180,000.
Good. So how do I work out the depreciation if it's over 6 years?
Well, just divide it by 6, I suppose. So it's 30,000 per year.
Correct. That's it. There you go. You've got the first one.
Okay.
All right. The second one was difficult, was tricky. Okay, so
Okay.
depreciation on equipment, the answer I got was 9,000. Okay, let's see if you can get the same answer by discussing the working. So tell me, what do I do with equipment's depreciation? When you
Okay,
read that,
15.
what must I do?
15% per annum according to the diminishing balance method. Equipment equipment purchased during the year has a residual value of 5,000. Sheesh, today, okay. All right, so
how do you approach a depreciation calculation? What do I do?
Hello?
Neil, what do I do?
Sorry, I lost you there for a while.
Okay, what do I do with depreciation when I read that?
You will have to have a timeline, I suppose.
Very good. Okay, what's the start of the year?
Start of the year is 1st of Jan, 2015.
Yes. And end will obviously be December.
Yeah.
Did I have balances at the beginning?
Yeah, I had equipment at cost was 70,000.
Good. So I had 70 here, but I'm using diminishing balance. So do I need the accumulated depreciation?
Yes.
Yes, because you work it out on carrying value.
Yes, okay.
Okay, so 70 minus what is the accumulated on equipment?
30.
30. So that gives me
40.
40. Right, what else did I have? Why did they give me this? Equipment purchased during the year. Was there a purchase of equipment during the year?
No. Except that that contribution that was made.
Yes. Okay, so I don't like the wording in the question because you didn't buy equipment. The business got equipment.
Yeah.
Okay, that's good. You've already identified it. So you have to include that here as well. So besides the 40,000 that you had at the start, you also had 25. But the 25 had a residual value of 5,000. So what do I do? I subtract 5 to get the 20, which is the depreciable amount that I depreciate for the year.
Okay.
Okay, and then I'm timesing that by 15%. Okay, so let me show you my diagram. Okay, but good. I'm happy with your interpretation. All right, so there's the diagram. Okay, there's the equipment costs and accumulated gives me carrying value. If I times the carrying value by 15, I get 6. Then I do the same thing for the new equipment. Okay, see there's the note. This is the capital contribution, not a purchase of new equipment.
Okay.
Okay, that gives you 3 if you multiply that by 15%. Okay, so what is the total? 9,000. 6 plus 3 gives you 9.
So, but you have to deduct that 5,000.
You have to deduct the 5,000 because that's the residual value, yes. Okay, that was the tricky bit. Deduct the residual value.
Okay.
Okay, let's write a note there. Okay, happy.
Okay.
Alright, then what do? You add up the left and the right. So if I add up those amounts, I get 139. Okay, that's the sum. If I add up those amounts, I get 122,800. Okay, which side's bigger, debit or credit?
Credit.
The credit, yes, that side was bigger. So if I add up those amounts, I get 139. And I want the same amount on both sides. So 139 minus all of that gives me a difference of 16,200, which is the amount that must be shared between the partners in their profit sharing ratio. And there I've even shown the split. You didn't have to, but I showed it.
Okay.
Okay. You could have done it this way as well. If you didn't like that method, you could have done it there. There's another method. Okay. Where I took the profit and I just added and subtracted, and I got the same answer, 16200.
Okay.
Okay, so option 2 is correct, either using that working, where you're looking at the profit, or you're using this working, where you're looking at the appropriation.
Okay. Okay.
Happy with 2?
Perfect.
Good.
Thank
option
you.
2. Option 2, question 5.
Yeah.
Great. Okay.
Excellent.
Next one, Neil. Focus here.
Okay, so this one I haven't read, so I must read this quickly.
Yeah, read it.
Okay, so Mickey Mouse and Donald Duck are partners in Disneyland in profits and losses to the ratio of 45-55. During the end of the year, the partners were approached by Goofy with a proposal to join the partnership. So they're asking a third party to join the partnership. Okay?
Good.
The partners agree that Goofy will be admitted to the partnership at the beginning of the next financial year of the partnership. So that's only after this year. So I don't think it's going to really then play any role, is it?
Have you picked up on the focus yet?
Yeah, it's well, obviously it's gonna, like I said, they're gonna add a new partner, so it's gonna be at the end of a partnership and the start of a new one.
Good. Okay, so let's think about the different sections. Remember, you've got 3 study units covering partnerships. Yeah. Is it disclosure? Is it a change in ownership, or is it liquidation?
Change in ownership.
Okay. Let's keep going. What else do they say? They've given you a trial balance.
Yeah.
And then they've given you some additional information.
Yeah.
Okay, what else do they give you? The required. Let's look at that. 6 and 7. So now we need to know what they want. Okay, because if we understand what they want, then we'll know what working to do. Okay, so what is the focus in number 6?
Which one of the following alternatives represent the correct amount that will be disclosed as the revelation surplus or deficit in the valuation account prior to the admission of Goofy? Oh my word.
Focus?
Is that valuation account.
Exactly. So what does a valuation account look like? It's like any other account. It'll have a debit and a credit, except it's a working account.
Working account. I remember that actually. Yeah.
Okay, so now you know what you need to do. Okay, number 7. What is 7 asking you for?
Which one of the following alternatives represent the correct amount of goodwill acquired in Disneyland? So we will have to calculate goodwill. That's at the end of that year, I suppose.
Correct, yes. And goodwill, to revise, is total consideration. Okay, it's that formula in your notes, okay? Minus the new owner's equity of the partnership. Okay, so I need 2 things. I need the total consideration, and I need to know what's the owner's equity of the new partnership. If I subtract the one from the other, I get the goodwill. Okay, that's what I'm thinking about. Okay, so now I know what I need to do. Draw up a T account for valuation and process a goodwill calculation. Right, so now that's what I'm thinking about when I go to the question. Right, so if I go to the question, I'm going to look at each of these accounts and I'm going to ask myself, does it affect the valuation or does it affect the goodwill calculation? Okay, so does capital M, Mickey, and Donald, do those 2 affect goodwill or valuation?
No.
It affects the goodwill calculation. Okay, because that's owner's equity. Okay, so it'll be part of the goodwill calculation. Goodwill calculation. Will current account affect the valuation or the goodwill?
I'm not sure.
Think about it. What does current account represent? The short-term entitlement of who?
Of the owners.
The owners. So if I want to know how much they're entitled to, do I need to consider it?
Yes.
Yes. Okay, that's also part of owner's equity. So I also need it, but for the goodwill calculation. Will bank be required for the valuation or the goodwill calculation?
No, I don't think so.
No. Okay, will the loan be required?
No.
No. Will the land and buildings be required?
No.
Well, yes, because assets can change in value. Okay, that'll affect valuation.
Oh, valuation.
Okay, if we're valuing these things. Okay, even the loan could also be part of valuation if it changes. Possibly. Okay, I don't think that came up in this question, but it could. Right, will trade receivables affect valuation or owner's equity?
No.
It'll affect valuation, possibly. Will vehicles affect valuation or goodwill?
Nope.
Valuation again.
Oh shit,
Okay, accumulated depreciation determines the value of the asset, so it'll be part of the valuation again, possibly. The inventory, part of the valuation, possibly, and trade payables, part of the valuation, possibly. Okay, it depends. All right, so remember, what are we looking at? We're looking at a valuation. So I need to check, are those things correctly valued? That's all. Okay, and the only way we know if it's valued correctly or not is by reading the question. Okay, so let's read the first point. What does the first point say?
I'm just making a note. Okay, the point 1 says the fair value of land and buildings was determined at 930. The buildings were originally acquired for 620.
Is that important?
Yeah, very much.
Correct. So how much are the buildings actually worth?
930.
How much have you recorded it at?
At 850.
Good. Am I going to value the buildings?
Yes.
Yes. By how much?
By 80,000.
Yes. Okay, so now I'll give you the working. What do I do to the account? Debit or credit the land and buildings?
Land and buildings is a capital, so it will be credited.
Land and buildings?
Sorry, it's an asset.
So it will be?
It will be debited.
Yes. Okay, so this is debit, land and buildings. See, always start with the workings. Credit what? Valuation.
Good.
Okay, so see, there's my working. That's what I'm thinking about.
Okay.
Okay, and then we'll obviously go to the account and we'll record it. Okay, I'll show you the working just now. Let's discuss all of them first, okay, and with their workings.
Okay.
Right, number 2. Is this going to affect valuation?
The partners noticed that a debtor with a balance of 60,000 had defaulted on repayments for 3 consecutive months. The partners resolved that his account be deemed as a doubtful account. So this guy hasn't been paying and he's owing 60,000.
Correct. So is this going to affect the debtors?
Yes.
Yes, because this is a doubtful debt. Doubtful debt means it's an allowance.
Yeah, it's an allowance for credit losses.
Exactly. Well done. There you go. You got it. Okay, so you would debit the valuation and you would credit the allowance. Good. See, there's your working. Debit valuation, credit allowance.
Okay.
Right, number 3.
On the night of the 30th of April, so let me just see, that's when the year ended.
Correct?
Fire broke out in the storage warehouse at Disneyland, causing extensive damage to merchandise. The undamaged stock was valued at 110,000. Okay, so they've lost 90,000 basically.
Good. So how do I decrease inventory?
You decrease inventory, which is an asset, by crediting it.
Yes. So the working for that one is credit inventory and debit the valuation. Well done. See, you've got the working.
Okay.
Right. Do I need 4?
On 1st of May, no, that's in the new year, so no.
Well, you do need it, but that's for the change in ownership. That's for the goodwill calculation.
Okay.
Okay, that's for the goodwill calc.
Okay.
Okay, so now we can look at it. All right, so do you agree point number 1, 2, and 3 will affect valuation?
Yep.
All right, so let's draw the T account and let's see what it looks like. Here's the T account for valuation. We spoke about the land going up. So remember, debit the land, credit the valuation.
Okay.
Then we said the stock went down. So we said credit the stock, okay, and debit the valuation. There's it.
Okay.
Then we said the debtors, okay, the receivables, okay, the provision, the allowance. Okay, so credit that and then debit the valuation.
Okay.
Okay, maybe just to add a note here, this was for the allowance. Allowance. Okay. And now, if I'm looking at the difference, which side's bigger, the debit or the credit?
The debit.
The debit. So if I add up those two, I get 150. Okay, so 150 is what? The total debit. So what do I have? All right, the question asks for what, Neil?
The question asks, will it be a surplus or a deficit?
Yes, in what account?
In the valuation account.
Correct, in the valuation account. So in the valuation account, so in this account, I have what? A debit or a credit?
A credit.
I have a credit. I'm crediting this account with those two figures. One for M, one for D, according to their splits.
Yeah.
Okay, so I'm crediting 70, which is the deficit that will reduce the partner's capital.
Okay.
Okay, so I went with option 3 there because it's in the valuation account. In the valuation account, I've got a credit.
Yeah.
Is that alright?
Perfect.
Okay, good. So let's go back and let's look at the goodwill calculation. Okay, help me with the goodwill calculation. Tell me what I need for the goodwill calculation.
Yes, I need to go back.
Total consideration.
Oh, yeah.
So how do I get that?
I beg your pardon?
How do I get total consideration?
Well, look at the capital and current accounts, I suppose.
You need to look at how much Donald Duck and Mickey Mouse had gotten for a share of the business. Goofy bought a share of the business, right?
Yes.
What did Goofy contribute?
Nothing yet.
No, have a look. 95 and 70.
Oh, yeah, I see. Yeah. On the 1st of May, Goofy was admitted to the partnership and contributed 95 and 17 equipment, yes. Okay.
Okay, so how much did Goofy contribute in total?
165.
All right, and how much did he get of the business?
He got 30%.
Correct. So here you're going to have old and you're going to have new. Okay, obviously old was M and D, new is M, D, and G. Okay, how much did G pay? G paid 165 for how much of the business?
For 30%.
For 30 over 100.
Yeah.
Okay, so that's how much Goofy is paying for 30% of the business. What is the actual business worth? Perceived value.
Yeah.
What is the perceived value?
So that you need to calculate.
How do I calculate it?
I can't remember.
165 times 100 divided by 30, because that's the full worth of the business.
Okay.
Okay, it's the maths, remember?
Okay.
Okay, so let's work that out.
Oh, yeah. Okay.
Okay, there's the first bit. Ooh, I need to move this over. There's it. Okay, now you can see that figure.
Okay.
Alright, so there's old and there's new.
Okay.
Goofy contributed 165 for 30% of the business. So if I gross it up, total perceived value is 550,000.
Okay.
That's what I believe the value of the business is, considering what Goofy was willing to pay.
Okay.
Okay, now what happened? Well, I need to look at the equity. Okay, so how much equity does M and D have? Well, in the actual working, you saw M started with capital, right?
Yep.
Okay, so how much did M have?
80,000.
Yes. Okay, what else did we have?
Well, Donald had 110,000.
We had the capital and the current.
Yes.
Okay, so we have to take those into consideration as well.
Okay.
Alright, so Mickey will be the C, the capital plus the current for Mickey.
Okay.
Okay, so 80 plus 50 is?
130.
130. But then, was there a valuation? Was there a valuation?
Yes.
Yes, there was. Okay, so what happens to the valuation? It gets apportioned to who?
To the members.
The members, yes, exactly, the partners. Alright, so I need to take off the loss. See, there's the valuation loss.
Oh, I see. Okay.
Alright, so how much capital do they have after the valuation? Those are the figures there.
Okay. So that was 80 plus 50, which is their
It's capital
plus current, less
capital plus current, minus
the
valuation.
Okay.
Okay, that's what I did there.
Okay.
Alright, and that gave me the 98 and the 50, the 98 500 and the 111 500. Alright, so how much do they contribute to the business?
Well, yeah, so 98 500 and 111 500.
Exactly, that's their contribution for a share of the business.
Okay.
Alright, so looking at that, what is the equity of the new business? Well, I just need to sum up. Okay, how much did Goofy contribute? 165. How much is M and D contributing? Those figures. Total equity is
375.
375, and the difference is the goodwill.
Okay.
Perceived value minus the actual value.
Okay. Okie dokie.
Right, next. 8.
So that is 375.
The
Less.
goodwill was the difference, which is 175.
175, yeah.
Okay, goodwill is 550 minus 375. There's it there.
Perfect. Okay, 100%.
Okay. 8.
Excellent.
What's the focus?
Bart and Simpson were in partnership trading as Bart Simpson's traders, sharing profit and losses in a ratio of 3 to 4. The partners decided to dissolve, so it's a liquidation.
Good. What type of liquidation?
Simultaneous liquidation.
Okay, so let's see if you remember which accounts do I need. I need 3 accounts for a simultaneous liquidation. What are they?
Capital, current.
Capital is 1, current isn't 1.
Okay.
Remember,
Yes.
simultaneous liquidation means sell everything today.
Yes, I can't remember now.
Capital, bank,
Capital, bank.
and liquidation.
Okay, 100%.
Okay, those are the only 3 accounts that you will ever have for a simultaneous liquidation account. Everything
Okay.
else is closed off.
Okay.
Okay, so those accounts will stay open. Current, where does that go?
Current goes to capital.
Good, you close off to capital. Where does
Yep.
goodwill go?
To capital.
Good. Where does the revaluation surplus go?
To capital.
Capital. Okay, so those accounts are accounts that you close off to
Okay.
capital. Okay, where do you close off the assets and the liabilities?
The bank.
No,
Oh.
not to bank.
To liquidation then.
Yes, because you're selling assets and you're paying off liabilities.
Okay. Oh,
Okay.
of course, yeah.
All right, so remember it's a big T account.
Yeah.
Okay, remember to keep it simple. Furniture and equipment will have what balance?
Furniture and equipment as assets will have a debit balance
Good. So where will I put 850 in liquidation?
on the debit side.
On the debit side, exactly. So that's what you would do for all of them. Okay.
Okay.
All those accounts that you close off to liquidation. Same thing with trade receivables. Trade receivables is what?
That is debtors. That's an asset
Good. So where will I put it on the liquidation account?
on the debit side.
On the debit side, exactly. Okay, let's just test you with one of the liabilities. Where would I put trade payables?
That is creditors, so that's a liability.
Yes.
So that'll go on the credit side
Of where?
of the liquidation account.
Correct. That's it. So just take all those accounts, post them as they are there onto the liquidation.
Okay.
All right.
So
Now
we
we need
just
to look at the
know what
adjustments.
is the liquidation account.
Liquidation account, yes, the T account.
Yeah.
Okay, because they want to know what the profit or loss is
Okay.
after liquidation, obviously. Okay. All right, let's do the workings for number 1, 2, 3, 4, 5, 6, 7. Okay, so number 1, equipment with a carrying amount of that is sold for cash. Where does that go?
That is so it's you. So assets will go down and bank will go up.
You don't have any assets. You've only got
Yeah,
bank.
So bank, you debit bank
And you credit what?
and you credit
You've only got 3 accounts.
and you credit capital.
No.
Oh, liquidation.
Yes. Okay, because all the assets are sitting in the liquidation account.
Okay.
Okay, so credit liquidation. There's it. There's the
Okay.
working.
Okay.
All right. The delivery van was taken over by S at a carrying value of 175. Which accounts do I affect?
Okay, so S basically have taken an asset out of the business.
Good.
So you will again debit bank.
No, there's no cash.
No, there's no cash. Yeah. There's no cash. So you would debit capital.
Yes. Good. Debit capital and credit what?
And credit liquidation.
Correct. Good. Because you only have those accounts. Good. Inventory was sold
Right.
for 100. What do I do?
So assets will go down. So
No,
that
you don't
we-
have an asset account.
Yeah. I'm just thinking out loud.
Okay.
So it's money in the bank. So you will debit bank.
Good. Credit
Right.
what?
liquidation.
Exactly. There you go. You got it. Okay, all debts were settled. Give me the working.
By customers in full. So that is your trade and your trade receivables.
Yes.
So that is an asset. So it is bank again. So because you receive money, so you will debit bank and credit liquidation.
100%. There you go. You got it. Good. Next. 5.
Liquidation. Cash received from the sale of office equipment and inventory was used to settle the loan. So that is a loan, which is a liability. So in this case, it will be liquidation, I suppose.
Yes. So debit liquidation.
Liquidation. And you will credit bank.
Yes. There you go. You got it. Number 6.
Bank. Liquidation. Creditors' account were paid an amount of 42,000 in full settlement of their accounts. So, you see, but it was only 102,000.
Don't worry about those accounts. Remember, you're closing everything off. You're just looking at number 6.
Okay.
Give me the working. Debit and credit what?
The creditors' accounts were paid an amount of 42,000.
So if you pay?
So we pay with less bank. So we will credit bank.
Good.
And we will debit liquidation.
Exactly. And the last one?
Bank liquidation. The liquidation cost amounted to 38,000. So that would be a liability.
No.
So
no liability. It's a cost. It's an expense.
It's an expense, yeah.
So debit the liquidation.
Yeah, and credit bank.
Yes. There you go. You've got it. Now you've got all the workings. Okay. Now you literally need to record what you just said in the T account, which I've done here. There's it. Okay, so what you told me is what I've recorded. Debit this, credit that. Debit this, credit that. Okay, then I look at the side. Which side's bigger? If I add up all the credits, I get that amount, 1529000. And if I add up those amounts, I get 1221522. Which side's bigger? That side is slightly bigger.
Yeah.
Alright, so the difference is 7,000, which goes to B and S. Okay, so after having done that, then it's easy. Just balance. Add up, subtract, get the difference. Option 1, 4 8.
Okay, fantastic.
Okay, all right. We will take a break shortly. I just want to finish the last two, or let's finish the next one quick, and then you can. I know you obviously need to tuck your kids in bed. Hey.
Please.
All right. So let's do 9 just to finish this one, and we can discuss the piecemeal after the break. Okay. All right, so piecemeal, after the break, number 9 was asking for what, Neil?
Which one of the following options represents the closing balance on the capital account of Simpson after the liquidation distribution?
Good. So now I'm looking at what? Simpson's capital. Okay, so Simpson has a capital balance of what?
He's got a capital balance of 110,000.
Correct, 110. Okay, did you get the errata from UNISA? They sent you a page like this, tutorial letter 1, errata for semester 1, and they said that you needed to change this.
Oh no, I don't see that.
Current account for Simpson must be changed to 120. It was 110 in your question. They said it's errata because you get, because if you do it with 110, you'll see it, you can't get an answer. You need to change it to 120.
Right.
Okay, so I'm glad that UNISA actually gave errata, because if they didn't, you wouldn't be able to choose an option. Okay, so for this particular question, you need to change this
to 120.
To 120. Okay, according to what they emailed the students. All right, so if I change it to 120, how do I close off current capital?
So you would credit that amount.
Yes, by 120.
Yeah.
Okay, and then what else do I close? We spoke about it earlier, goodwill. Do I close goodwill off to capital?
No.
Yes, I do.
Okay.
Okay, because this is a change in ownership.
Okay.
Okay, it's a liquidation. Okay, well, not a change in ownership, sorry, liquidation. Right, so if you're liquidating, is goodwill good or bad?
It's bad.
It's bad. Okay, so this 275, how much goes to Simpson?
Simpson got 4 sevens.
4/7. Good. Well done. All right. So here I'll have the goodwill. Okay, the 4/7. Right. And then the last account we need to allocate is the revaluation. What will the revaluation do to the capital account?
The revaluation is a surplus, so it would credit the capital account.
Exactly. Very good. How much does he get?
260.
But a portion of it.
Excuse me. Times 4/7.
Correct. Good. Okay, so that's all you had to do. And then obviously you have to take the balancing figure from the liquidation. Okay, so which I'll show you here. All right, so that's what you told me. You told me goodwill, you told me liquidation, you told me the balances, all right, and the surplus.
Okay.
All I had to do here was balance the account off. But I had one amount here that came from question 8. Remember, question 8 is the liquidation entitlement that S has in the business. The liquidation profit. Okay, then I add up the debits and credits. This side is obviously bigger than that side. So the balance that I brought down and carried down is 15428. Right, and that is one of the options, taking the errata into consideration. Right, they said you must change that to 120.
Okay.
All right, and that completes that question. So answer to number 9, let's just go back and check.
Number 3.
Let's see. Yes. Okay, number 3, correct.
Okay, good.
All right, so I'm going to pause here quickly.
Okay, so Annette, Chris, and Rebecca were in partnership, which traded as trio traders. The partnership shared profit and losses on a ratio of 5:3:2 respectively. The partnership decided to liquidate. So there's the liquidation, and it's a piecemeal.
Good. And that's also important, eh? The loss, not the loss, the sharing, the profit and loss sharing.
Yeah, 5:3:2.
Yes. Okay, so we've got obviously 5:3:2, which is 5/10, 3/10, 2/10.
Yeah, 50%,
okay, you've got
30%.
piecemeal. So as soon as you see that, how do I calculate a piecemeal liquidation? What do I need to do it?
Shit, I can't remember.
A table. All right,
Table.
lots and lots of columns.
Okay.
Okay, that's how you approach a piecemeal liquidation question.
Right.
Okay, so see, that's the thinking. So you know what you've got, piecemeal liquidation. You're thinking about the process. I need a table, I need columns, I need different accounts. Okay, so all of these are going to be balances in a table.
Yes, okay.
Okay, so I'm going to start with that. Okay, so let me show you the working for the first step. There's the first step. Right, profit sharing ratio, 5:3:2, right?
Okay.
That's the capital. Then you've got all the other accounts. Current A, current C, current R. Then you've got goodwill, revaluation surplus, loan, creditors, furniture and equipment, accumulated depreciation, inventory, debtors, and bank. Okay, you've got all of those.
Okay.
Right, then the question goes on and they say that at the first realization of assets, all inventory was sold for 450. There's stage 1.
Yeah.
That's the first step that they've taken in liquidating the business. Do you agree?
Yep.
Right, then they say which of the following alternatives represents the correct amounts in respect of the first interim repayment to the partners. Apply the loss absorption capacity method. So they even tell you that you need to use it.
Yes, yeah.
Okay, just to revise, when is loss absorption applicable? What are the two questions?
So, do we have assets left and do we have cash left?
Perfect. There you go. You already know it. It's nice. So do I still have other assets? And is there cash available to partners? If you answer yes to both, then you use the loss absorption capacity method.
Yep.
All right. So that's all we've got. We've got the information. I've put all of those amounts in the table, and I need that one stage. Okay. Obviously, before you get to stage 1, you need to consider the accounts that are opened. Okay, so which accounts do I close off? Do I close current accounts?
Yes.
Yes. To where?
to capital.
Perfect. Do I close off goodwill?
Yes.
To where?
To liquidation.
No, to capital.
Capital, okay.
Okay, do I close off revaluation surplus?
Yes.
To where?
Also to capital,
Also
I
to
think.
capital. Alright, so those are accounts that you need to close off. Remember, you need to close off those accounts because they're equity account and they relate to the owner.
Okay.
Okay, all the other accounts will stay open because this is what?
A piecemeal.
A peaceful liquidation. Good. So you don't use a liquidation account. Right, they did give you a funny account here called accumulated depreciation. Alright, so accumulated depreciation will affect which account?
Depreciation.
The furniture and equipment.
Yeah.
Okay, because remember, you need to determine what the assets are worth at the end when you're trying to sell them.
Okay, so you need to less that off then.
I'm going to close that off to furniture and equipment.
Okay, yeah. Okay, perfect.
Okay, good. So let's have a look at the working. So we said close off all those accounts. So which accounts do I close off?
The current accounts, the goodwill accounts, the revaluation.
Nice. Okay, so that's what I've done there. Close off current. There's the current. Close off the goodwill. There's the goodwill. Close off the revaluation surplus. Obviously in the profit sharing ratio. 5/10 for A, 3/10 for C, 2/10 for R, and you get those amounts.
Okay.
Okay, then
So,
I said close off this. Where do I close that off to?
To furniture and equipment.
Correct. So if I close that off, I get those balances.
Okay.
Alright, so remember, it's worthwhile checking. I like to check using Excel because then I can show you guys what the totals are. In the exam, you don't need to check. Okay, as long as you're careful. Right, so if you're adding and subtracting accurately, obviously in the exam you won't have time to check. Okay, now we have time, so I am going to check. If I add up all my capital, so if I add up all of those amounts, I get that total for my owner's equity.
Okay.
Right, do I have assets liabilities? Yes. Those are my assets in blue, and those are my liabilities in pink. So if I add up those and I subtract that, I get the owner's equity in green.
Okay.
And that's the 97,700. Do those amounts balance?
Yep.
Yes, so I know I've done the first step correctly. Okay, so that's where you are currently. Do I have enough cash to pay off my loans and my liabilities?
So my loan is 62 and my creditors are 86, so that's just over 70,000. No, I don't have enough cash.
I don't have enough cash. So how do I get more cash?
You must sell your inventory.
Correct. How much did I sell the inventory for?
45.
Did I make a profit or loss?
You made a loss
Good. Of?
of 4,000.
Who takes the loss?
The partners.
Well done. Okay, so there's stage 1. Alright, so stage 1, you sold inventory, there were proceeds, there was a loss. Allocate the loss and?
As per the sharing ratio.
Yes, and show the inventory and bank.
Okay.
Okay, so there's my next step. Alright,
Okay.
question. Do I still have assets?
No.
Yes, I do. Do I have enough cash to pay off the liabilities?
Yes, you do.
Yes, you do. So do I pay off liabilities first, then pay out the partners?
Yep.
Always. Okay, so
Always.
let's pay off the creditors. Right, so you can see I've paid off the creditors. There's the minus. Minus
Okay.
62,100, minus 8,600. Now I've got 0 liabilities and I've paid off 70,700 of the cash. The cash is gone.
Okay.
Alright,
Okay.
so this is where we are currently. Okay, is loss
Okay.
absorption going to apply?
No. Oh, yes, it will. Will, yeah.
Okay, do you still have other assets?
Yes.
Is there cash available to be distributed?
Yes.
Yes, the loss absorption will apply. So what does loss absorption say? It says assume we have a maximum loss. So I can't pay or sell any of those assets. If I can't
Okay.
sell those assets, those other assets, what's left over? 17,000. Okay,
Yes.
who gets the 17,000? Well, we first need to assign the maximum loss.
Okay.
Does that make sense?
Yep.
Okay, so there's the maximum loss. This plus that. How do I
Okay.
assign the loss to the partners? According to their ratio, 532.
Okay.
That's the loss that they take.
Okay.
Okay, what do they have? That's what they have. Alright, so if I
Okay.
total up, who's the bad partner?
R.
Good. R is the bad partner. So A and C have to take on the loss.
Yep.
How do you allocate this loss to the partners?
So A will take 5/8 and C will take 3/8.
Good. That's very important. Okay, great. So that's important. So let's highlight that. There's the green. 5 and 3.
Okay.
There's the allocation. Right. Do they still have balances afterwards? Well, let's subtract the loss. And they do. Right. So
Yeah.
who are the good partners?
Those two, A and C.
Exactly. So how do you distribute the 17,000? According to that. That's how much A gets, and that's how much C gets.
So basically then R is out of the equation. He gets nothing.
R gets nothing of the 17,000.
Okay.
R is still there though. Okay, so that's a good question. So after the payout, let me put an extra line here. Okay, let me copy those formats. Okay. All right. So this, it'll be that minus that. Okay. All right, and then here you've still got 0 liabilities. Okay. 0. This is the interim repayment. Okay, so obviously first interim
Right.
repayment. Okay,
That's
you would
what-
have had minus that figure, and you would have had minus 17,000 there, which gives you a big 0 here. Alright, so that's the last step. That's after the interim repayment. Okay, so the question was asking for what?
After the first interim repayment.
No, they were asking for the distribution.
Oh, yeah.
So it's this for A, this for C, and 0 for R.
Yeah. So it's option 1.
Yes, option 1, correct. Okay, have a look. If I check my OE equals A minus L, I've got the same. Those amounts add up to that. Those amounts add up to that. And that's as far as you can go. You don't have any other stages.
Perfect.
Great, and that's the assignment.
That's a lot of work for 1 pointer.
It is a lot, okay, but obviously in the exam, this will be given as a long question, not a multiple choice one.
Yeah.
All right, and then in a long question, you'll be getting marks for all of those workings that you're doing.
Okay, perfect.
Okay, great,
Okay.
happy.
Excellent. Thank you very much.
You're welcome, thank you. Okay, so let's close that and let's look at the last bit. Okay, we've got a nice question here looking at, okay, I need to close this, that's the assignment. And let's open up the study guide.
Okay.
Okay, so we're looking at 5.4. Alright, so Neil, I'm going to ask you to help me a lot with this question because we've done 3 already. I've done 5.1, 5.2, 5.3. Okay, we've got one more to do here and then that covers the CCs. Okay, so first step with any question is to do what?
Identify the elements on the trial balance.
And tell me where to disclose it, yes. Okay,
Okay.
so give me the accounts. What do I have?
Okay, so let's start off. So the first one is members' contribution, L lock. So that's capital.
Good, so where do I put it?
Associate.
Yes, okay.
Second one as well.
Members contribution
Okay.
L.
Okay.
Amount.
Amount is 252.
Beginning or end?
End.
Good. Next.
Next one is members contribution G gate.
Amount.
It's an end. It's 245.
Great. Next.
Land and buildings. That's an asset. That will go to the statement of financial position.
Good. Which asset?
Non-current.
Correct. Amount?
500,000.
Great. Keep going. You're doing good.
Vehicles at cost. That's also a non-current asset. Statement of financial position 54,000.
Good.
Equipment at cost. Statement of financial position non-current asset 18,000.
Correct.
Inventories. Also an asset. Also statement of financial position. Closing balance 172,080. Okay. Trade receivables control, that's debtors control. That is an asset, goes to statement, it goes to current assets, statement of financial position. 50,184. No, 50,184. Okay. Then we've got trade payables control, which is creditors. It's liability. It'll go to, that is an expense. So it goes to your statement of comprehensive income.
No, be careful. You said trade credit payables. Payables is a liability, you said.
Of course, it's a liability.
So
yeah.
no statement of comprehensive income.
Yeah. It's a current liability. Yeah. Yeah. Okay. And it is 83,304. Yes, perfect. Then there's a loan to G gate. So a loan to a partner it's an asset.
Good. Well done.
Yeah. So it goes to the statement of financial position. 12,000 Rand. Then there's an investment. It's a fixed deposit at ABC Bank. That is a non-current asset.
Yes. Okay. So I'm going to have to add an extra line here, or just squeeze it in if you're using it. Okay. Investment.
Yeah.
In fixed deposit. Yeah. Good.
25,000.
Good.
Okay. Then we've got bank. It's also an asset, non-current. Statement of financial position. 6956. Okay. Then we've got accumulated depreciation. That is a negative asset. That was at the beginning of the year.
So where does it go?
It goes to your statement of financial position.
Yes.
But we take it off from equipment.
There we go.
Minus 3,600. Okay, the next one is sales. That is an income. Well, it goes to sales, so it's statement of comprehensive income. Yeah, the amount is 1,168,236. Yeah. Okay, then we've got cost of sales, which goes just underneath that on the statement of comprehensive income, which is 778,812. Yeah. Okay, then we've got retained earnings. Retained earnings. Is that an asset?
Try again.
Retained earnings. So earned it before, so it's an income.
No, retained earnings is profit that you've generated in the past that's attributable to who?
To the business.
The owners.
The owners, okay? So if it's to the owners, it must goes to SOCI.
Correct. Beginning or end?
No, it's the beginning.
Amount?
6420.
Nice. There we go. Keep going.
So what would you call that then? What element is it?
It's equity. It's capital in nature.
Okay, sure.
Okay, retained earnings is capital. Owner's equity.
Okay. Then we've got a revaluation surplus. That must be capital as well.
Correct.
Okay. The value is 140,000.
Opening or closing?
Closing.
Closing.
Yeah. Okay, then we've got rental expenses. That's an expense that goes to the statement of comprehensive income. Okay, then we've got the value is 14400. Okay, then we've got advertising expenses. It's also an expense, statement of comprehensive income. The value is 4,800. Salary and wages, also an expense, statement of comprehensive income, 168,020. Water and electricity, that's an expense, statement of comprehensive income, 8640. Telephone expense, it's an expense, statement of comprehensive income, 2160. Then we've got income from investment. That's the other income that goes to the statement of comprehensive income of 1,500. Okay. Then we've got credit losses, which is an expense. Goes to the statement of comprehensive income, and it is 540. Then we've got admin expenses, which is an expense, goes to the statement of comprehensive income, 2868. Then we've got remuneration of an accounting officer, that's also an expense, it's like a salary, statement of comprehensive income, 4320. And then we've got our income tax, which goes at the bottom of the statement of comprehensive income, of 30,000. Okay. Then we've got interim profit distribution to members. So that will go to SOCI.
Good, well done. Yeah, that's a tricky one.
Yeah.
Okay, so after profit for the year, you'll have an interim distribution. And that's going to come off your retained earnings. What was the amount?
The amount is 48,000.
Okay, good.
Okay. And then the last one, so what is that?
It's equity. It affects equity. It's a distribution. It's like drawings.
Okay. Okay.
The last one you said?
The last one is interest income. So that's an other income. Uh, 720.
Good. Okay, so you've gone through the table. You said that was the last one. So let's go back. And now let's look at the adjustments. Okay, so now you need to tell me what the debits and credits are in terms of the adjustments. What do I adjust? Where do I adjust?
Okay. Okay, so number one, a debtor cannot be traced and his debt of 184 must be written off as irrecoverable. The members decided to create an allowance for credit losses of 1,000 rand. Okay, so that 184 that comes off your debtors control.
Good.
So you would credit debtors control.
Yes.
Credit debtors control.
Good, we've got that. And debit what?
And we would debit. Let me just think of it. So it comes off there. Comes off debtors control, which bank. No, help me a bit, please.
Credit losses. Okay, you're writing off bad debt.
No.
184 here.
Credit, of course, yeah.
Okay, now you've got the
Okay.
debit and the credits.
Okay, perfect.
Now, how do you adjust an allowance? Do you have an allowance?
No.
No, so you're creating one. How do you create an allowance?
So an allowance would be a negative asset. Am I right?
Correct. So how do I create a negative asset?
So you would credit like bank.
No.
Well, assets,
Which one? Allowances.
allowances. You credit
Debit what?
allowances. And debit income.
No. Credit losses. Okay, because that's the future credit losses that you'll write off.
Okay.
Okay, so there's the working to support your disclosure. Okay, so now I'm going to subtract. How much must the allowance be?
1,000 rand.
Okay, so there's the adjustments for the bad debt and the allowance. And now I still need to record the 1,000 as part of my credit losses.
Okay. Okay.
Next.
So the electricity account for February 785 was received on the 20th of March. But, I mean, we've got the electricity, water and electricity expense in there for the year.
Okay, but have a look. What is this? What happened? You received the bill for Feb
Yeah.
only in March.
See, that's when the year ended. Sorry. Yeah. So the year ended there, and we only received it in March. So we still need to account for that. Yeah.
Correct.
Yes, I see now. Okay.
So what is that? It's something that you still need to pay.
Yeah. So it's a liability.
Yes. What's the liability called?
Electricity account.
Accrued expense.
Yeah. Okay. So I would credit that accrued expense.
Correct. What was the
Credit.
amount?
785.
Good. And then
Accrued expense. Electricity. I would credit liability, and I would debit expense because your expenses becomes more.
correct. Okay, it's too little because you still need to pay this account.
Expense, water plus electricity. Yeah, so you would add it there.
Exactly.
Okay, beautiful. Okay.
Keep going. Next one.
Okay, so number 3 is on the 1st of June 2014, so it was in the year, an insurance contract was entered into. The premium of 800 Rand payable annually on the 1st of June is included in admin expenses. So it's included there, so it's sitting there already. So, yeah, well, so it's there. So do I just need to fix the disclosure?
Well, yes. Okay, first fix the disclosure and then look at the timing.
Okay.
So good. You got the easy mark. Minus 800, right?
Yeah. So
Show
that's
it
annual.
separately.
Yeah. Okay.
There's your first bit.
Okay.
Okay. Then look at the timing. So what's the start of the year?
The start of the year is the 1st of March,
And the end?
28th Feb.
Good. So when did we make this payment for the insurance contract?
In June. So we're only going to make it in June this year. Yeah.
So this payment is for how many months?
For 12 months.
Yes. So
we're only going to pay for June, July, August, September, October, November, December, January, February for 9 months.
okay, good. So 9 months is during the year and 3 months
Afterwards. The new year.
outside. So
Yes.
what is that part?
Well, that's in a new financial year.
So what is it called? You've paid for something this year for next year.
Yeah. I don't know. Prepaid expenses.
Yes.
Yes.
Okay, so what type of account is a prepaid expense?
Must be an asset.
Good. So debit the asset, credit the what?
Debit the asset. Credit the expense.
Exactly, yes, because the expense is too high. You can't show
Yeah.
12 months in this year because you've only got 9 months.
Yeah.
Alright, so how much do I pay per month?
So you take that 800 and divide it by 12.
Yes, which is 666, times that by 3 months. Ooh, hold on, 3 months, times that by 3 months. 200 is
Prepaid.
prepaid, yes. There you go, you've got it. Okay, so what do I do? Record this. Credit the insurance, which is the statement of comprehensive income.
Yeah.
Statement of financial position. Prepaid expense goes there. Insurance will go there. Okay, so now I need to
Okay.
minus 200
Yeah.
from the insurance
Yeah.
and then record it.
Under assets. Plus 200.
Yes.
200. Okay.
Next.
The loan to G-Gate was made on the 1st of March, so that's right at the beginning of the year. At 12% interest per annum, payable every 6 months. The loan is unsecured and immediately callable.
Okay, so that's short term. So we've got it here already. There's the loan to gate. So we don't need to change the disclosure.
Okay?
We just need to provide for the interest. Have you
No.
paid the interest?
No.
No. Must you still pay the interest?
Yes.
Yes. So what type of account are you creating?
Well, the interest account.
Yes, but
Expense.
interest income, interest expense. This is the loan to gate.
The loan to Gate was an asset, so it's an income.
Yes, good. Okay, so debit the accrued interest. Interest income.
Credit income. Okay.
Let's work out the interest. What is the balance? 12,000, hey?
The balance was, yes, 12,000 and it's 12% per annum.
Okay, so 12,000 times 12%.
Yeah. Beautiful.
Where does this go as well?
So it's interest income will go to statement of comprehensive income
Yes.
under other income. There we go.
Next.
Okay. Next is included in salaries and wages is an amount of 20,000 paid to Locke as remuneration for his special contribution to the management of the enterprise. So we need to fix the disclosure first by lessing off 20,000 from salary and wages and showing it differently. So just call it remuneration to L. Locke.
Well done. Excellent. See, that's an easy mark that most students forget to get, but you didn't.
Okay.
Okay, well done. Salary to member Locke.
Oh, yeah.
That's it. Just for doing that, it's disclosure.
Okay.
Good. Next.
Okay, so is that it?
Yes, that's it.
Okay, beautiful. That's easy. Okay. All right. Then number 6 says, let me just make a note here. Sorry. Disclosure. Then number 6 says the investment in ABC Bank. So that is, where is that investment here? Okay, never mind. Was made on the 1st of May 2014 for 60 months at 12% interest per annum, which is receivable every 6 months on the 31st of October and the 30th of April. Okay, so that is, what is the amount?
We had it earlier. Here's it here. Investment in fixed deposit, 25. There's it.
Oh, there it is. Yeah, 25,000. Okay.
Yeah. So there's the financial year. When did you make this investment?
We've made this investment on the 1st of May.
So how much interest are you going to have?
For 10 months.
Yes. Okay, so May to Feb. Is it 10, eh? Yeah.
Beg your pardon?
Is it 10 months?
Yes, it's 10 months, yeah.
Okay, how much? 12% again, eh?
Yep.
Alright, so 10 over 12 equals, let's see what we get. 2,500. That's again accrued interest income. Okay, so I'm going to have to add an extra line here. Accrued interest income. You can group these if you want to. Okay, but then you have to show the working in brackets. I'm just showing it separate. I prefer to show everything separate, so at least then they know what I'm showing for each of those different line items.
So you would debit accrued interest income?
Yes, you would debit accrued interest income and credit the interest income, which we need to still process. Happy with that bit?
Yeah.
Okay, so go back. Here's the income from investment. Next.
500. So number 7 says the land and buildings were acquired on the 31st of March 2013. So that's a year before. For 300,000 and consist of shops and offices situated at number 23 Ravi Road, Hammanskraal. Additions to buildings were completed at the cost of 60,000 on the 31st of July 2015. So that's outside our year.
Correct.
Well,
so what are they talking about there? The past or the present?
Well, the past and the future.
No, it's the past and the past. Both of this is in the past.
But the 31st of July 2015 is in the future.
Where do you see that in the question?
Oh, well, our year ended on the 28th of Feb 2015.
Yes, okay. 28 Feb 2015, I agree.
Yeah.
I don't see that here. Is this the 2017 version? Yeah, this is the 2017 version. Does your study guide say something different here?
Yeah, mine says there additions to buildings were completed at the cost of 60,000.
Yeah.
On the 31st of July 2015.
Oh, okay. So that's July. That's next year.
Yes.
Okay, that's strange. Okay, that's a discrepancy in the actual question. Let's check their solution to see what they did. Land and buildings. Here's land and buildings. Okay, there's land and buildings.
Yeah.
All right, so looking at their solution, They've got the 340, which is what we started with, which is what we saw. Well, we saw 300 in the question. Land and buildings were acquired on 31st March for 300. That was in the past.
Yes.
Okay, that's what they said we had at the beginning. Okay, then they said additions to the buildings were completed at a cost of 60. Okay, so there's the additions in terms of 60, and then they've processed a revaluation surplus of 100. Okay, being the difference in price or the increase, and they said the 500 was at the end.
Yeah.
All right, so see, it doesn't change the disclosure, because what did we see on the trial balance for the year end? Land and buildings 500.
500, yeah.
Okay, so we're not going to change that. So that was fine as is. What we had in the question was fine. What they gave us here is just an adjustment in terms of this. Okay, so we had beginning of the year, 1st of the 3rd, 14, 28th of the 2nd, 15. Okay, so they basically say that there are additions, but the additions are actually during the year, not after the year. So that's a problem with the... I'm not too sure why your study guide is different to mine. This was the one that was the... This is the electronic copy that they've posted on my UNISA.
Yeah, I mean,
so it's a bit strange why it's a bit different, but don't worry about that. We can just discuss it here. So if I'm looking at their solution, is your solution the same?
Let's have a look. That's on page 96. 97. Yeah, my solution looks exactly like yours.
Okay, so if the solution is the same, then we need to just fix the question. Okay, so the question should have said that 60,000 was during the year. That's all you need to do. You just need to say this 60,000 was during.
I'm just going to scratch that out on 31st July 2015.
Yeah, or you can just cross that out. That's also fine. Okay, if it's during the year, then you would account for it during the year, which would then show the 60,000 during the year.
Okay, perfect. I'll do that.
Okay, but it doesn't change our disclosure. So number 7 is just, well, thank you for telling us that. Okay, it's not going to change this, which is 500,000.
Okay.
Because what they showed us is for the past, not the present.
Okay.
Okay, next.
No, that's it. Oh, no, sorry, yes, number 8. Okay, so number 8 says on the 28th of Feb 2014, so that was the previous year.
See, there's the revaluation.
Yeah, the land and buildings were revalued for the first time to 340. The land and buildings are not depreciated.
Correct. See, that's what we saw here earlier. So, just to go back, that was what you had at the beginning of the year.
Yeah.
Okay, then they told you, well, you had to adjust that. You had to say 60 was the improvements during the year.
Oh, so that brings you to 400.
So obviously the end balance was 500. So 500 minus 60, okay, gives you 100,000, which is the
difference, the revaluation.
Difference. Yeah, see, that's what they said in the question. So that's the opening, that's the closing, and that's the adjustments, which is what we see there.
Yeah, exactly.
Okay, so that's fine as is. The 60,000 must just be during the year, not in the next period.
It's this. Okay.
All right, so that's fine. Again, that's just nice to know. Thanks for telling us, but we don't need to disclose it.
Okay, perfect.
Okay, next, last bits.
Last one is provision must still be made for the following. Okay, so depreciation on the vehicle and equipment at 20% per annum on the diminished balance. The vehicle was acquired on the 1st of September 2014. So we need a timeline.
Correct. Good. Okay, so let's draw a timeline. Vehicles, there's our vehicles.
Yeah.
54.
Yep.
Okay, we don't actually need a timeline because it's a short calculation. It's 54,000 times, what was the rate?
20%.
20%, how many months? September to Feb.
September, October, November, December, January, Feb. 6 months.
6 months, eh? September, October, November, December, January, Feb. You're happy with 6? Okay, 6 over 12.
Yeah.
Alright, so that's our depreciation. Let's see what that adds up to. 5,400 vehicles.
Okay.
Vehicles depreciation.
Okay.
Okay, so 5,400 must also be recorded where?
So it's non-current assets.
Was there
So-
depreciation on this vehicle? No, there
Sorry?
wasn't. Okay, because you bought it during the year. Okay, so there wouldn't be anything.
Yeah.
Alright, so 5,400 must also go here. Depreciation. Brackets. 5,400. I forgot the other depreciation for the equipment. 3,600. No, that was accumulated. Okay, no, that we don't need.
Yeah, that was accumulated, yeah.
Okay, but equipment we still need to do.
Well, I didn't mention it anyway.
No, they
Oh,
do.
no, that's
They
not-
do. They
that's
do.
a-
Look at the question.
Yes.
It's
Yeah.
vehicles and equipment.
Yes, you're right, yeah.
Okay, so we still need to process the equipment depreciation. So the equipment depreciation, what would the carrying value be?
The carrying value would be the equipment at cost less than accumulated depreciation.
Exactly. Good. So the 18 minus the 36.
Yes,
All right, and then this will be times by?
20%
Good.
times, that will be for 12 then, times 1.
Yes, times 1. We don't have to show that, so times 20% gives me that.
Yeah.
2880.
Yeah.
Okay, did that make sense?
Yep.
Alright, so the 2880 I still need to show here as well. Then I've got the depreciation there.
Okay, perfect.
Okay, next.
Next is actual normal income tax for the financial year amounted to 51494. So we go to the statement of comprehensive income
Good.
and we say what it actually was.
What is it?
51494.
Okay, so what's the difference?
So there will be a difference of that. So it's a liability.
Yes. Okay, there's the difference. Where do you disclose liabilities?
Liabilities will go to the statement of financial position.
Correct.
Yeah. So that the difference.
And there's the SARS liability. Great, next.
And then the last one says an additional distribution to members of 36,000. Members share profits equally. So each guy gets 18,000 on SOCI.
Good, well done. Okay, so distribution payable to members because it hasn't been paid yet. That's a separate liability account that I need to provide for. Amount 36.
36 it is.
Okay, so additional distribution 36,000. Okay, and that would have come from where?
That would have come
The
from
profits.
the profit, yes.
Okay, so you take it off the profit. Now I can sum up this. There's the retained earnings. Okay, and there's the distribution. Right, where do I put those amounts? Oh, hold on a sec. I'm forgetting the profit. That's bad.
Okay.
I can't tally this up yet because I haven't totaled my income statement.
Yeah.
Okay, so let's total. Let's go back.
Okay.
Alright, so, okay, these figures didn't change. I'm just going to write them as is. Gross profit is the difference. Sum up the income. Okay, water and electricity changed. We need to add up.
Yeah.
This didn't change. This did change.
2068.
This didn't change. And then we just sum up that. Alright, so profit before tax.
Gross income less expenses.
Yeah, this minus the, or plus rather, minus the expenses plus the income gives us that answer there. This minus the tax gives me 128. Where does that go?
That goes to your profit for the year on SOCI.
Good. Okay, that's an easy mark that you'll get irrespective of what the amount is, as long as you've worked out a total. So equals, take that figure through. Alright, so there's the figure. Now I can sum that up. Alright, so where do these figures go?
Go to your statement of financial position.
Good. Okay, so the last bit is to reference those amounts here. So members, contribution, retained earnings, revaluation, surplus. Okay, so the members contribution equals the member L plus the member G. Okay, retained earnings is that figure. Revaluation surplus is that figure. And the distribution to members payable is a liability.
Okay.
There's the liability, 36. Okay, that was all asterisks from the SOCI. Alright, then we just need to wrap up this disclosure. So let's total up. Let's start with the assets. So 500 is there. Okay, I'm going to have to sum up what, an answer here for this one. Equals
400. Okay.
Okay, the trade receivables, total up this. $6,956. Alright, so my total here, sum up all the non-current, sum up all the current, add those two amounts together, and I get that answer.
Okay.
Okay. Then I need to total up all of this. And then I need to total up my liabilities. Okay, obviously no non-current.
Oh.
This is 83040. Sum up all of that. Okay, so liabilities is non-current, or it'll just be the current. Okay, and then sum up that, this, equity, plus liabilities. Let's hope it's the same.
Yes, beautiful.
It is the same. Okay, great. So we've done it correctly. No need to check for mistakes.
Excellent.
Okay. Alright, Neil. And that's another example complete. And you did this, majority of it. You were telling me what to do where.
Well, it's so easy when you sit on the other side. When I try and do it myself, I doubt myself all the time.
Don't doubt yourself. You did well. You definitely passed and probably even got 70-80% for the question. I just had to help with one or two adjustments. But remember, adjustments is just thing that we need to look at separately. Okay, so majority of these you would have totaled up and you would have tallied up. So it's a good effort. Okay.
So I must just practice it more and more and more. That's all.
You just got to practice. We'll practice a lot. We still have assignment 2, and then we've still got lots of past papers.
Okay, sharp, 100%.
Okay, great. All right. So I'll save this and I'll send this to you. That's it for today. Any questions?
No, fantastic.